Proud supporters of Africa this week. Engine, with us, you are number one.
Oil prices have tumbled to new lows this week. This might curtail significant investment in capital expenditure on Nigeria's crumbling oil infrastructure, impact negatively on Ghana's hopes for 14.4% GDP growth this year, and imperil exploration across sub-Saharan Africa. From Canary Wharf in London, we spoke to Richard Swan, managing editor of News for Europe, Middle East and Africa at Platts, a leading global provider of energy, petrochemicals and metals information.
You're seeing some real tensions play out in the oil price. That's why we've had this roller coaster, if you like. Prices have tumbled in recent weeks. We're all worried about what's going to happen to these European economies. It's really sluggish over here. In the US economy, we nearly had a debt default. We've had a credit downgrade. These are bad news items. But it's not a low oil price. You know, $100 oil a few years ago would have been a very high oil price. So you've got a real tight market unsupporting that. The oil fundamentals, there's not bags of oil out there. Don't forget, we've still got Libya off the market.
Yeah.
You know, you've got some real contradictions playing out there.
All right, so obviously everybody will be waiting to see what OPEC decides just by way of supplying the market in the near future. But let's talk about the medium to the long term. Africa's got significant oil finds. Apparently, we account for 13% of the world's reserves, except that that 13% isn't entirely tapped. Why do we see limited investments in oil? I think a lot of players want to get into the sector. It's just very expensive.
Yeah, I think they do. I wouldn't see it as it's undertapped relative to something like the North Sea or the Gulf of Mexico. But there is a fairly significant and growing exploration sector in lots of Africa. I mean, Nigeria, obviously, we all know about. Angola now, if you go back 20 years ago, and now look at Angola for now, it's transformed itself. Look at the amount of companies exploring there. Ghana's just become an oil exporter. You're seeing exploration happening like never before in places like Cote d'Ivoire, in Senegal as well. So you are seeing significant investment. This oil price, all right, it's fallen in the last couple of weeks. That's not going to deter exploration. $100 oil is plenty for exploration companies. It's a very profitable business to be in. So if the resources are there at these sort of price levels, companies will go and look for it if the conditions are right.
I mean, what we did see at the worst of the global crisis was the tumbling of energy stocks. And for many prospective investors into oil companies, they were saying there isn't much value. We're going to be spending so much money on these exploration activities and ultimately not getting a fair return based on the investment. Obviously, conditions have changed with the oil price being lifted up, but still those capital expenditure needs are exorbitant. What's the incentive for people going through? Because I think the benefits are long-term post the exploration.
By and large, they are. But oil exploration is not a stable return business. It's not for the faint-hearted. It's high risk, high return, especially in the deep water. It's really expensive drilling in the deep water. You've no idea what you're going to find. But if you're lucky, if you do strike oil, then you hit the jackpot. Look at what's happened to, I would say, in the context of Africa, something like Tullow Oil offshore Ghana. A few years ago, Tullow Oil was a small exploration company, known in the industry, but not a household name. They're now in the FTSE 100 index on the London Stock Exchange because of the success they've had in Ghana. Elsewhere as well, but Ghana's the main one for them.
The frontier markets for oil, I mean, obviously Nigeria is a tapped market. It is the largest exporter from Africa. It's one of the main importers or exporters to the United States, for instance. Ghana producing somewhere in the region of $120,000 a barrel. Still a lot of work to be done. Where would you say the greatest opportunities lie?
Africa really is still a land of opportunity. A lot of exploration acreage has been licensed to international companies in the last few years, and you're going to see a lot of drilling. West Africa historically has taken the attention, but look at the East as well. Things are stepping up there. It's on nothing like the scale of Nigeria yet, but you're seeing more in East Africa. And don't forget the landlocked countries in the middle. Uganda has found oil, and that is going to be developed in the years to come.
All right. Now, talking about Nigeria, for instance, we do have productive assets there, and it's been so for the longest time. But there's this whole program of deregulation at the moment, and the petroleum industry bill that needs to come on stream by the end of the year as multinationals sell off their acreage and some of their assets to local investors. How do you expect the industry to change from a financing point of view and from a productivity point of view?
Yeah, the international investment sort of climate in Nigeria has been put off at the moment. They're waiting for this petroleum industry bill, which is huge. It's going to change the landscape of the whole industry for them. companies are used to dealing with some operating uncertainty in Nigeria, that's for sure, whether it's political or to do with the social communities that they operate in. This one's a bit different, and we've seen investment fall. If you look at the exploration levels in Nigeria, they've really fallen off. So if something's already producing, it stays producing. But where's the new stuff? Where's the growth? Those new projects, they're not in the pipeline because of the uncertainty at the moment. And that's in the upstream exploration sector, which I think most people were thinking, okay, we can cope with the uncertainty in the downstream. The investment in refining is problematic, and Nigeria's been looking for years to get new investors to come into the refining sector. But the upstream has stayed pretty stable. It's been a real growth story. That's slowing down too now, so that's a concern. You talked just now about this end-year deadline for the PIB to pass, and sure, I hope for their sake it happens, but it's very delayed already. We've seen so many deadlines come and go on this one.
And then the distinction between oil and gas. Increasingly, we're hearing about gas being the new way. It's the cleaner way, it's the safer way, it's definitely where there are greenfield opportunities on the Gulf of Guinea and in other areas. It should be what Africa's focused on.
Yeah, and gas is no longer the unwanted byproduct of exploration. It clearly has a market. But I think there's an issue here for Africa. Like some of the more successful gas projects, they're focused on the export. It's the LNG projects, whether it's in Nigeria, Equatorial Guinea, Angola is going down this road. These projects are world scale, they're very big, the numbers involved, whether it's the gas resources or the dollars for the investment, are huge, and the projects work. But the local infrastructure, the local market, we're still waiting for that to be monetized successfully. We've been waiting a long time in Nigeria. Nigeria should have been leading the way on this. With all the gas they flare, the government has set out its intentions, and we're still waiting to see that come to fruition. Ghana's going to be the same story, of course. There's a very similar thing going to play out there with the gas from Jubilee.
Kenyan and Mauritius central banks have joined forces to increase cooperation in banking supervision along the east coast of Africa. The governors of the respective countries signed an agreement this week to enhance the sharing of information between the countries' two central banks. Our Kenyan team was there to document it.
Diversification of foreign reserve currencies is seen as one way of buffering African economies against the current financial crisis seen in the developed West. This, according to the governor of the Bank of Mauritius.
We believe that this good crisis should not be allowed to go to waste. There are some lessons to be drawn from it, and I think for the immediate future, all of us should try to protect our own economies from the worst repercussions of this crisis. So I think one of them is to make sure that we do not get too exposed to these particular reserve currencies and take such steps as your reserve managers can take in your own country, quietly, to diversify away from too much dependence on what happens to these particular currencies.
The Mauritian government has diversified its reserves beyond the US dollar and British pound. The central bank has been purchasing commodity currencies and is also eyeing government securities from some of the BRIC nations.
We have diversified into Australian dollars, New Zealand dollars, the so-called commodity currencies. We've diversified into Canadian dollars, and most recently we've diversified into Norwegian krona and Swedish krona. And we are busy looking at the possibility of buying Chinese renminbi bonds and also South African and Indian bonds, just to diversify away from too much dependence on the well-known euro and dollar currencies.
The signing of the MOU between Mauritius and Kenya will see cross-border supervision and information sharing between these two major financial hubs. Mauritius is an international center for its offshore financial services, while Kenya is increasingly setting the pace in mobile money transfer services.
Mauritius is the repository of the REPS, that is the regional payment and settlement system. So essentially this is an enhancement of the work that we're doing together. And of course, it's also to tell you that there are some Kenyan banks that have already invested in Mauritius. The one specific one, I&M, has already established a presence in Mauritius, while others are also considering exploring some opportunities. Similarly, banks from Mauritius have direct and indirect commercial relations, as Frederick Pere has mentioned, in Kenya, and obviously some of them are also exploring entry into Kenya as they see the vibrancy of the market shaping up in the East African region.
There are growing concerns around the depreciation of the Kenyan shilling, which may have negative long-term economic effects. This has become a source of great anxiety for the country's central bank.
We are having sleepless nights. So it is beyond the word concern. But the problem here is we have been let down by institutions that support the supply side of the economy. So we are so helpless when supply side is not working, because the only solution to the supply side is to say, please bring the goods into the market and the price will solve itself. But what do we do in the meantime? In the meantime, we tighten monetary policy so that we don't ratify those prices that are increasing to ration the existing supply. That is, we don't ratify supply shocks.